Right, lads, second profitable week.
Another one.
After 8 straight weeks, 7 episodes of the Thunder documentary, we hit a lick for 2 weeks in a row on the market makers. With the trade that I caught, I'm gonna be honest, I can't imagine that they're happy. I imagine that they're cussing me, dashing N words, like Uncle Ruckus from that one episode.
Hang that nigga now. I got the rope right here.
Let's just get into the analysis, man. Right, lads. As usual, we start off on the economic calendar so we can understand what our mindset was for this week. So Monday, obviously, as we can see, there's no New York news. That's a low probability day immediately. Tuesday, there's no New York news, but there's London close news. So you could have traded London close if that's something that, is a part of your edge. But for me personally, even when I was looking at the price action on Tuesday, I didn't see anything that materialized from my edge around London close. Plus, there's also London close. Let's be honest, London close likely to be choppy anyways. But yeah, there was definitely an injection of volatility there for other people, but there was nothing for me. And Wednesday, same story. Not even high impact around London close, so not even looking at the charts on Wednesday. Now Thursday, I said I was going to trade New York because first of all, what we need to understand is New York makes the real move for the day, right? Makes the weekly, like the move in the direction of the weekly expansion. That's where New York moves, right? That's where it tends to move. And if this is the first bit of New York news that we have, then this is likely fulfilling the weekly expansion. So because I predicted bullish dollar, if you go back to our weekly outlook for last week, I predicted a bullish dollar. I was expecting that we were going to see a short on foreign currencies on Euro USD and GBP USD. And then also, London was a potential trading. Friday was also a potential trading day as well. But mainly looking out for Thursday, New York. That's what I was looking for. Coming over to Euro USD. Looking at Wednesday. So when I hopped on the charts, I woke up, prayed, done all that stuff, good stuff. And then when I looked at the chart, I saw, okay, Asia consolidated very, very nicely. And for those of you that don't know, the Asian consolidation should last from 6 p.m. the previous day all the way to 12 a.m. on the day that you're trading. So, and this is all New York time, by the way. This is all New York time, as you can see. So this is how it should be, right? And we don't trade London when there's a trending Asia, but if it consolidates nicely like this, then by all means, right? So what I also did, and this is very important for you guys to understand, I went onto DXY and saw that DXY was also confirming that yes, Asia did consolidate. So I said, okay, cool. And DXY, the consolidation was very, very neat. It was very like straight line, very neat. I was like, okay, cool. So I was like, okay, which side are we going to take on the consolidation, buy side or sell side? Because that is going to be the Judas swing and we're going to swing the opposite direction, right? As you can see, we took sell side of the consolidation right here at 1 a.m. And after taking sell side, what happened? Let's look. Let me show you. So we tapped in to this bullish order block here. These down candles in here. This probably combines to make a daily bullish order block. And as you can see, if I even stretch the fib across all of them, what do? We come and we tap the mean threshold of this daily bullish order block, right? Easy, very, very easy to see, very, very easy trade to spot. All we had to do then is go into the M1, wait for our market structure shift, which I'll show you in a second. Market structure shift, which occurred in here, which we cannot see the clear fair value gap on the M1. So what do our rules dictate? Our rules dictate that we go and see it on the M3 or more senior time frame, but not the M5. M1 and M3 mainly. We couldn't find it on the M1, so we went to the M3, right, to find our fair value gap after the market structure shift. So here is the candle that broke structure here, and this is the fair value gap. As we can see, it's a bit harder to see for the untrained eye, but you can see that the gap in between where no sell side delivery is offered, this market structure shifts to the upside. No sell side delivery is offered. The last time sell side was offered is this red candle here, and the last time and the next time sell side is offered is this red candle here, and it consolidates above. That sinks. See this consolidation above the fair value gap? That sinks the fair value gap across more time frames. And that's what I talk about as well. I also talk about making sure that your fair value gaps have time sync. They have time synchronization. And that's basically when you can see the fair value gap across more time frames, because that makes it a high probability fair value gap. So we take, as usual, we take our entry at the closure of the fair value gap here, you know, this candle's high here, and sniper entry, we're gone. We were off to the races immediately. Right there, minimal drawdown. Love to see it, 1.6 pip stop loss. My analysis was to go up to here because, like I mentioned, I was expecting New York short, but I didn't go all the way up there. I just targeted the Asian high. I don't know if I can show you guys that. Yep. So this was the Asian high right here. As you can see, what time is that? The time on that is 5:30, right? So, you know, just shy of like, you know, the actual Asian window from 6 till 10. But, you know, as you can see, this high right here is what we were targeting. And, you know, TP got smashed. In terms of my, how I took profits here, what I opted to do was, you know, in order, because, you know, we had this conversation before where it's like my trade journal reflects the trade journal of a profitable trader, but due to the way I manage my trades, I wasn't seeing that reflect in percentage gains. So what did I opt to do? Now I've changed to where I take 80% of the position off at 1 to 3 and then let the rest run for full analysis. So that's exactly what I did. 1 to 3 came here. And I'm going to be honest, guys, like, whilst I was waiting for it to go to 1 to 3, even though I barely had any drawdown, you know, I still am a human being. I still had like a sort of like, oh, like, you know, what's going to happen? Like, is it going to hit, you know, TP1? Like, what is going to happen here? Da, da, da. So, and for that reason, and because I know that, you know, I'm not at that level yet where I can just take 50% off and then like forget about the trade. I need to take more off, right? And that's what I do, right? That's exactly what I do. So, you know, we watched it very, very closely until it hit our 1 to 3 mark, and we took 8% of position off. And then after that, I was like, okay, majority of the trade's done. 0.2 left running. And, you know, that ended up being 2% because it hit the full 1 to 10. So, you know, that was beautiful trade management. You know, that's me understanding that me and myself right now as a trader, I don't have the ability yet in order to just take 50% off and then forget about the trade, because I want percentage gains. And that's the reality, right? That's the reality. So in order to avoid over managing the trade, I just take more off. And, you know, that has been better for my psychology. Now, what I also want you guys to pay attention to is where and the specifics of my entry time. And this is not something that I've heard anybody really speak about. Sorry. This is not something that I've heard anybody really speak about, right? The specifics and the precision on my entry. And that's what I want you guys to pay attention to. So let me show you guys an economic calendar, something really, really quickly. Okay, guys, pay attention. What do we say, right? If the euro or any of either the euro or the pound have medium or high impact news ahead of it, the move will not happen until the real move in London will not happen until that news has taken place. I say this all the time. So I know that 3 a.m. there's medium impact news. Perfect. So I know specifically, right, that I don't need to be on the chart until 30 minutes before that news that is coming, right? I know I don't need to be on the chart until 30 minutes before to see my market structure shift. I know what my point of interest is, which was that 4-hour bullish, that it's more of a daily bullish order block that I showed you on the 4-hour, right? I know that my point of interest is there, and I know that it's gonna tap into it. But I know that the market structure shift, the actual move, the sniper entry is not gonna form until maximum 30 minutes before, right? And I'm going to show you guys, this is something that you guys have seen but may not have picked up on over the past weeks that I've been shown. But this is something that I'm going to call you guys to attention. I'm going to call you guys' attention to today, right? Look, 3 a.m. Now watch. It's going to be about it. It more often than not, if I'm going to be narrowing it down, like narrow, 15 minutes before the news comes out, promise you that's when the market structure shift is happening. More often than not. But I come on 30 minutes just to make sure that I'm prepared and I'm watching the charts. But 15 minutes most of the time is when, between the news release and leading up to the news release, that's when the market structure shift occurs. And let me show you what happened on this trade itself. Okay, you guys think I'm chatting, right? You guys think I'm chatting. Understand this. Understand this. What happened here? The market structure shift, right, happened at 2 a.m., right? We chopped. Like I said, if there's medium or high impact news, right, on your currency pair, the move in London will not take place until that news release has been released, right? Even though the market structure shift was created an hour before, the entry didn't actually form until what? What's the time, guys? 2:48. 2:48. You cannot make this up. 2:48 is the time that the entry actually forms. Right? It's the time that the entry actually forms, and what I've seen is it's mostly 15 minutes before the news release. That's when the sniper entry actually forms. So if you're following along and you actually have a good feel for my strategy, that's one of the big gems of my strategy. 15 minutes before the news release, boom. That's exactly when the sniper entry is likely to form. So we got ours at 2:48 here, got tagged in. In fact, let's get more precise on the M1. 2:49, lads. To be more precise, 2:49. Remember that. But yeah, for the rest of the week, we didn't really take any more trades. So that's been it for this weekly recap, sorry. And yeah, from this trade we made, I believe, 4.4%. So up 3.5% on our funded account, alhamdulillah. Yeah, I can't lie, bro. This week, I was patient. My analysis did pan out as I expected. For the most part, we had, the down range. And if you watched the weekly outlook for the previous week, you would have seen we predicted that the dollar would be bullish and therefore foreign currencies would be bearish. And that's what happened for the week. And due to news, we knew that Monday, Tuesday, Wednesday were likely to consolidate. Didn't get any trades on those days. Wasn't even really watching the charts like that on those days. And then Thursday, we got ourselves a setup. So yeah, this week basically just came down to patience. And like Warren Buffett says, the markets take money from the impatient and give it to the patient.